Well, for the last 3 or 4 days, housing finance companies have been really active. One of them is Canfin Homes, that will be conducting a meeting of the board of directors of the company on 12th January to consider the size of the rights issue and also the ratio. C. Ilango, managing director of the company, now joins in. Mr. Ilango, hi, good morning. Before we talk about the rights issue, I just want to ask about the business in general. How's it shaping up? Because the stock market is quite excited about the housing finance companies.
Yeah. Good morning. Our business is growing really well on year-on-year basis 40, not only for our company, for most of the housing finance company. As such, the business is really good and it continues to be good. And of late, there is a good market sentiment and we don't find any issues regarding increasing our book size.
Okay. All right, Mr. Ilango, just wanted more details with regards to what you all will be discussing the board on the 12th of January in terms of rights issue. How much are you looking to raise, etc.?
Yeah, that board meeting actually it is up to 300 crores. The issue size may be between 250 to 300 crores. Then we will be deciding the price, premium, the ratio and all during that meeting. And we propose to rise somewhere during February. Okay. The issue may be opening in February.
Okay. What kind of equity dilution should be there in the bank then, Mr. Ilango?
Sir, you will be hearing, sir. You will be hearing on because it's a futuristic statement once again. Yeah, it will be a modest discount will be given.
Will that complete your fundraising requirements, or is there more to go?
Yeah, with 250 to 300 crores, with our future growth pattern of year-on-year basis 30 to 35%, I think the fundraising it will be taking care of our requirement till 2017 without any hitch.
Okay, one more thing, will the shareholding stay the same? I mean, will Canara Bank participate in the equal number in the rights issue?
Yeah, in the rights issue, what we were given to understand from Canara Bank and other two major investors that they have, in principle, agreed to contribute in full.
Okay. Mr. Ilango, can you give us a sense in terms of how exactly your loan growth is doing at this point in time, considering that you're mainly focused in the South India market? Can you tell us how you're doing in terms of loan growth and what competition looks like also?
Yeah, our loan growth is year-on-year basis. It is 40% for the last 2 years. This year also so far till December, from 5,842 crores in March 14 to around 7,650 crores in December 2014. Year-on-year basis, if you work out, it comes out 40%, which we will maintain in future. Probably next year, since the loan book size, the denominator increases, we may be in the growing the range of 35%.
So what will you do in FY15?
So for our FY15, we are expecting around 8,300 crores loan book size. 8,300 to 8,400.
All right.
Presently, we are 7,650.
Okay, by the way, that's an important news flashing on Unitech. The DOT has moved Supreme Court to retain the performance-linked bank guarantee of Unitech of 160 crores. This would be regarding the Uninor, the then joint venture between Unitech and Telenor. Of course, Unitech had exited the telecom business. They sold the stake back to Telenor, but what we believe is that the DOT wants to retain that 160 crore bank guarantee, and that's going to be interesting for a company like Unitech. 160 crores for them would also be huge money at this point in time.
Maybe the stock is up because the market was expecting more to be retained. But any which way, the stock is just about holding with gains of around 2.3 to 2% at this point in time. But let's get back to our conversation with Mr. Ilango then. Sir, you know, one of the things that stands out for Canfin Homes is that your gross NPAs are very well maintained at 0.3%, like a lot of other housing finance companies as well. How do you manage to do that, and what would be the guidance that you can provide us on your gross NPAs?
Yeah, as far as gross NPA is concerned, the present gross NPA as on March is 0.21. And with seasoning of all our accounts, of course, if you see that our major growth in the book size has happened in the last 4 years, and the behavior of that entire portfolio still reflect the same old thing. So earlier we were giving a salaried clause only, 95% of our advance were to the salaried clause. Now presently we are giving around 75% to the salaried clause and 25% to the business clause. We don't see any type of pressure because we have strengthened our mechanisms, and our managers in all branches are sensitized on the issue, and they are taking care at SMEA 1 level itself. From the SMEA 1 level, from the month-on-month basis, then we are maintaining it. And there are a lot of credit monitoring system. Then since ours is a core banking on a daily basis monitoring system, then vigilance setup, then audit system. These things takes care of our fundamental strength of gross NPA. In future also, we will maintain the gross NPA at the level of 0.25. That's what it is our aim, and our people are on the job, and they are very careful in that issue.
By when? By when?
Yeah, in future. Right?
Okay.
By March 15 and thereafter also 0.25, because our target is our gross NPA should never exceed 0.25. In fact, we are our exposure to the builder loan is only 0.5%.
Okay. So just one last question from my side. Then I just wanted a couple of statistics from you. Your net interest margins, where do you see them go? It's currently at 2.4%. What is your guidance by March end quarter?
Yeah.
Secondly, there is a report, there is a brokerage report which indicates that you all can operate at return on assets of around 1.5% and return on equity can be around 16 to 17 odd %. Where does it currently stand at? Do you think that's a fair assumption?
Yeah. Presently, our ROE is around 18 to 19% with the present equity base. With the induction of the amount through the rights capital, that ROE, average return on equity, we are confident that we will maintain around 16 to 17% next year also. And from thereafter, it will increase. Presently, our ROA is in the range of 1.4 to 1.3. Because it is basically our top line was growing around 40%, while bottom line is growing at 20% because numerator denominator. So with the increase in our advance yield, with the reduction in borrowing cost, with the 25% increase in net interest income, so we are confident that this ROA we will maintain at 1.5 in FY 15 and 16 also.
And net interest margin?
Regarding ROE, as I have told that we are confident that we will be maintaining around 17. We have had our own internal calculations. We are aiming to touch 20% by 2000.
All right, Mr. Ilango, thanks a lot for your time today. That's Canfin Homes.